Hi guys, how's it going? It's Unpacking and welcome back to my YouTube channel. In today's video, I want to unpack Thungela resources a little bit. The price has been declining since last year this time or even before. So the question is, do you sell or do you buy more? Let's unpack. As I've mentioned, the share price is declining. Last year this time, the share price was 277 and today it's 139, and that's a 50% decline, as I've said. And it's understandable why people will be fearful and feel that they need to sell their shares, because imagine if you had bought these shares last year at 277 and today they are down 50%, you'd want to sell. I understand that you would definitely want to sell. And a lot of people bought the shares because of the attractive dividends and the rising share price at the time. I mean, who wouldn't want to? If a company is showing a bit of a growth, an increase in share price, who wouldn't want to jump on the train? So that's actually what happened. And honestly, if you had done a proper research on the business and not invest simply because somebody else's portfolio is on 50% increase and so you want to jump on the train, you wouldn't be shaken, because you would trust that the business will do well regardless of the share price going up or down. So the question is, did you buy the business? Did you invest in the business? Or did you buy because the share price was increasing? When you invest in the business, when you buy the business, you buy because you have done your proper research, you understand the nature of the business, you understand their financials, you have checked their finances out and confident that this company will be able to survive for the next 3 to 5 years. You are confident in the company, because if you now buy a company without making proper research, then times like this whereby share prices are down 50%, you'd want to sell. But if you have confidence in the company that you have bought, then you know that regardless of whatever, as I've mentioned, the market is going to correct itself. At some point the price is gonna go high and all is going to be well, actually. And when you have checked out a company's finances and you have seen that the revenue has been increasing for the past 2 years or the past 3 years, and when you check their strategy and all of that, when you go through their annual report and you actually understand that they're still going to make more investments and how they are looking to increase their earnings in the coming years, you shouldn't have that much issues. Actually, you shouldn't even be shaken, as I've said. That's what happens when you buy the business, not when you buy because the share price is going up and everything. And actually, whatever happens to a company's share price is a result of their previous year's earnings or previous year's investment decision. And there's a very famous saying that be greedy when others are fearful and be fearful when others are greedy. And at times like this, a lot of people are fearful. So are you deciding to be greedy, or are you just deciding to be fearful as well and sell your shares? So if we look at the chart, Thungela in 2022 was making waves, incredible waves, and the share price was 86 rands in Jan, and it went all the way up to 377 in September. This is more than 100% growth in the share price. And what contributed to that growth was the price of coals, which was at its record high. So that led to Thungela doubling its profits. And Thungela is a thermal coal producer and exporter. So if the prices of coals increases, then their earnings will increase as a result of an increase in sales. That's basically what happened last year. And if demand for coal increases, then the earnings will also increase, and that will lead to an increase in the share price, because an increase in earnings is attractive to investors. And we know that when people are buying more shares, that leads to an increase in the share price because the demand for that shares is high at that time. And also growth will also be expected from that company, and a dividend payout if it's a dividend paying stock. And coal prices in 2022 were twice as high as coal prices in 2021, and this makes sense as to why Thungela was thriving the way that it was in 2022. And this year's prices are half last year's prices, and obviously earnings will decline, and that will also lead to a decline in the share price. And I believe other businesses that are in coal business will also experience a decline in their earnings because coal price is a factor, right? And it's an external factor, not an internal business problem. So it will affect all the companies that are in the coal industry. And prices were high last year because of the Russia and Ukraine war. There was a ban imposed on Russia coal, so that led to a decline in supply, therefore leading to an increase in the price of coal. And understanding demand and supply, where there is less supply and demand is high, prices tend to increase. So with coal prices declining this year, obviously Thungela's earnings will decrease. And I've actually read an article saying that Thungela expects to report a decline in earnings as compared to last year. Yes, a decline in earnings and cash generation. So for their first 6 months, which has ended in 30 June. And the company reporting on lower earnings, that is not what people want to hear. So the share prices will decrease as a result of that. That is why share prices of other companies increase when they announce that their earnings have increased. So I guess earnings is that much important to investors. I don't have any shares in Thungela, but I'm honestly looking to buy because the share price has decreased compared to last year. So I will be buying them at a discount. And looking at their finances, they are well positioned. They have a positive cash flow, they are profitable, and they don't have that much debt. And I've went through their annual report for 2022. It's available on the internet. If you also want to check it out, you can go to the internet, you'll find it there. Or if you just want to check out their financial position, the information is available on Yahoo Finance and Dividend Investing. No, I'm lying, on investing.com. Sorry, not dividend investing, but investing.com. And as a dividend investor, I find Thungela to be very attractive. Last year they paid a dividend per share of 100 Rand, and they paid that off from their reserves because they have a positive cash flow. And they don't have that much debt, so they actually afford to pay that much in dividends. And they have listed on the JSE in 2021. So this is their second year being listed. So I don't feel there's enough track record to prove that Thungela is or one of the best dividend paying stock, or that it will continue paying dividends in the future. But they have said it in their annual reports that they are looking to reward their shareholders with dividends. So my conclusion is that they'll continue paying dividends. And obviously this year's earnings won't be as good as last year's earnings. So we'll see how they've done for the first 6 months and how much they're going to declare in dividends. But I'm definitely putting my coins into Thungela, and reason is because of their nature of the business. I'm not just buying because last year they have paid a dividend of 100 Rand. I'm buying because I understand the business, and I've done my research actually. I believe they are doing quite well. They are making great investments, and they are also diversifying their portfolio. They are acquiring businesses in other parts of the country because they are facing challenges in South African business. All of this is in their annual reports. Yes, in their annual reports. And annual reports can be so long. Thungela's document is 169 pages long, so you need to know what to focus on because you won't go through the entire annual report. It's going to be very much time consuming, so you need to know which areas you're going to focus on or what is important to you as an investor. And they'll be releasing their earnings on the 21st of August, so I'm planning to wait until then before I buy any shares actually. This video is ending here, and I hope this was insightful. I hope so. So I will see you guys in my next video, where I will be restructuring my portfolio because I have stocks to sell, so I want to make a video of that. And thank you so much for watching until the end of the video. Don't forget to like, comment and subscribe. Bye.